All right, let's talk about Netflix. The stock's taken a pretty big hit recently, and the market is just buzzing with questions. So today, we're going to do a little technical investigation. We're going to sift through the charts, look for clues, and really try to figure out what the data is telling us. And that brings us to the million-dollar question, right? Is this big drop in Netflix a golden opportunity to buy in, or is it a classic bear trap just waiting to spring? We're going to follow the evidence and see which story the charts are actually telling. Every investigation needs a starting point, a piece of evidence. For us, it's the price itself, $100.24. You can think of this as our scene of the crime. But, a price all by itself doesn't mean much, so let's give it some context. To really get how far Netflix has fallen, just look at where it is in its yearly range. The current price is sitting at less than 35% of its 52-week high. So this confirms, this wasn't just a little dip, this was a significant tumble. So, to solve this case, the first thing we need to do is zoom out and look at the big picture. Our investigation is going to start with the long-term trend. And right away, we find our first major clue. It comes from the price's position relative to a really critical long-term health indicator. And trust me, it's sending a very, very clear signal. Okay, so the current price is hanging out around $100, but the 200-day simple moving average is way up at over $113. That $13 gap, that is a huge bearish signal that analysts watch like a hawk. So what exactly is this indicator anyway? Well, the SMA 200 is actually pretty simple. It's just the stock's average closing price over the last 200 trading days. Think of it as the stock's long-term trend line, kind of like its vital sign. When the price is trading below that line, like Netflix is right now, it's a clear signal of a long-term downward or bearish trend. All right, so the long-term picture looks pretty bearish. Now, let's grab the magnifying glass and zoom in on the more recent evidence. Let's investigate the short-term momentum clues. What's been happening right now? Well, in just one recent trading day, the stock fell almost 3%. Now, for a company this big, that's a pretty serious move. But a price drop, even a big one, doesn't tell us the whole story. So, the really crucial question becomes, how much power was behind that drop? Was it just sort of a lazy drift downward, or was there real conviction, real selling pressure, forcing it lower? And boom, here it is. This is our smoking gun, a volume ratio of 3.15. What that means is the number of shares that were traded on that down day was over 3 times the average. That is a massive red flag for anybody hoping this stock is going to go up. So what does all that high volume really mean? It tells us this isn't just a few small investors getting nervous and selling off. A price drop on volume this high, that points to some serious, high-conviction selling from the big players, large institutions, and that is a powerful bearish signal. And the evidence just keeps piling up. There's another popular tool called the MACD indicator, which measures momentum, and it is deep in negative territory. This basically confirms what that high volume was already telling us. The downward momentum here is strong, and you just can't deny it. So far, pretty much every clue is pointing down, down, down. But, in any good investigation, there's always a twist. Is there any evidence that could offer a little glimmer of hope for the bulls? And just when the case seems closed, we find this. Some of the short-term indicators are starting to flash a warning, but this time, it's a warning for the bears, for the people betting the price will keep falling. This is where it gets really interesting. The Relative Strength Index, or RSI, is at 34, which is getting super close to what traders call oversold. But look at the Stochk RSI. It's at 0. I mean, it's not just approaching oversold, it is officially oversold. You can't get any lower than that. So what does oversold actually mean? Well, it's a technical condition that suggests the selling has been so intense for so long that the downward momentum might just be running out of gas. It's like you've stretched a rubber band to its absolute limit. At some point, it's probably going to snap back, even if it's just for a little bit. So, here it is, the core conflict of our case, the ultimate tug of war. The bears have a really powerful argument. The price is below its long-term trend, the selling volume is huge, and momentum is negative. But the bulls have this crucial piece of counter evidence. The stock is extremely oversold, which hints that a bounce could be coming any minute. So we have strong evidence pointing in completely opposite directions. You've got this powerful long-term downtrend clashing with a severely oversold short-term condition. How do we put all these clues together and reach a verdict? Well, after weighing all the evidence, the analysis points to one very specific conclusion. Netflix is a prime candidate for a dead cat bounce. Yeah, it's a memorable piece of market jargon, but it perfectly captures this conflict that we've just uncovered. A dead cat bounce is basically a short-term rally that happens right in the middle of a larger downtrend. Those oversold indicators we saw, they might fuel a temporary little pop in the price, but all that powerful long-term bearish evidence suggests that bounce might not last very long. So this brings us to the crucial pivot point. The analysis lays out two key scenarios to watch. In the bearish case, if the stock can't hold the line right around $101, the evidence suggests the next stop is the support level down at about 97. But in the bullish scenario, if the price can actually reclaim that same $101 level, that could trigger the short-term bounce with a target up near 105.
So let's wrap up this investigation. The dominant trend is clearly down, no question about it, but the conditions are ripe for a short-term bounce. All the evidence is on the table, the key price levels are marked. The only question left is, which one's going to break first?